Hey everybody, Marty Mazur, good evening. It's the 24th of January 2017. Coming at you a day early this week on the video. It's the only chance I'm going to have to get this out to you. And I'm going to run right through it, try to keep you just a few minutes tonight. The screen in front of you is that January trends file. I updated you right up to here on the Mexican peso in last week's weekly message. So since then, I brought in these topics. First one, foreigners are far less active in the treasury market as Trump takes over. So our international relationships are going to be interesting as we see them develop going forward based on what we're hearing in the rhetoric. So if foreign investors indeed are less active in the treasury market, that's got implications with regard to where interest rates might be going forward. India is viewed by some as sorely unappreciated. That's the case I've been making for a while. Hedge funds are immensely short U.S. treasuries, so betting for a fall, which would be an increase in interest rates. Eurozone economy continues to look very good. Australia is all in on the Trans-Pacific Partnership without the United States. New home market show phenomenally low inventories. In fact, I think the lowest in the history of the survey. So we have a very tight housing market, which should mean notably higher prices going forward. States showing employment growth notably weaker, believe it or not, despite other employment data, than past expansions would suggest. That's something to keep an eye on. The Richmond Fed survey shows mixed current conditions, but a great deal of optimism over the next 6 months. The flash manufacturing PMI for January, this is the preliminary index they do mid-month, was very strong across the board. France's manufacturing and services PMIs were both very strong. German and Eurozone, good, very strong in terms of relative expectations on the manufacturing side. Missed expectations on services, but still a strong number. Brazil foreign direct investment, believe it or not, was twice what was expected last month. So that's interesting as Brazil tries to figure itself out. South Korea GDP at 2.3%, a little better than expected, and inflation in Australia a little lower than expected. Okay, so jumping over to the chart side, I wanted to introduce you to another indicator, although it's one I've shown you before, but this is actually using it on a long-term basis. This is the moving average convergence divergence. It's the second panel down here. Now, this is a momentum indicator. Now, this is a monthly chart. So this white line here basically subtracts the 26-month moving average from the 12-month moving average. The red line is called the signal line. That's the 9-day moving average, or in this case, the 9-month moving average of the white line. So I know that gets fairly technical. The histogram basically moves. It's very sensitive. It begins to move as these two lines move together. So when the signal line drops below, or I should say when the white line drops above the signal line, the actual MACD line, technicians would tell you that's a buy signal. When it drops below, they would tell you that's a sell signal. On a monthly basis, this is going to be a slow-moving, another long-term trend indicator. And I've shown you moving averages before. I like the 200-day as a long-term. This basically just takes two several-month moving averages, brings them together, and just puts more texture, more detail, maybe more data into the analysis. So as you can see, good things tend to happen when the white line, the MACD line, is above the signal line. You see it rise above there, and sure enough, you can see the market bottom. This, by the way, is SPY, which is the ETF that tracks the S&P 500 index. And here you see it rolling over, dropping below the line, and there's the mortgage bubble. There it is breaking. Here it is coming back above, and then we have a real nice stretch, correction in there, and so forth. And then here we are kind of topping out 2014 and that down year we had in 2015. And here we are right here with the MACD giving us a buy signal. And as I've shown you in other indicators, the setup for the market looks strong to me. Now let's take a quick look at sectors. Starting with technology, you can see the MACD is in buy mode or in long-term bullish mode right now on the monthly basis, and you can see the index moving up. Industrials, again, nicely moving here in 2016 into bullish territory, and you can see industrials taking off to the upside. Materials, nice bullish look for materials as well. Energy having a really, really rough go of it. You can see in 2016, the MACD turned. When it gets above the zero line here, that's also another bullish sign. So we're coming up from below. That tends to be a nice trend indicator there as well. Looking at commodities, the global commodity index, you can see it bottomed back here in 2016, early in the year, and you see the MACD confirmed it on a longer term trend basis. Financials have been the most unloved, or one of the most unloved sectors for quite some time. Very big bear market there, not even near the peak yet in 2007, but you can see the MACD line is saying very good things about the future in financials. Looking at consumer discretionary, phenomenal run. Really nice looking chart for the most point in here. As it began to lose momentum, you can see the MACD rolled over. No real big declines here, although that's pretty notable right there. And you can see trying to come back, the histogram is signaling that we might get a bullish crossover there. So we'll see how that turns out. You get to the more defensive sectors, healthcare. Healthcare rolled over in 2015, although the market continued to do pretty well, came back, but the MACD was continuing to flash not so good things on a longer term basis. We'll see how that goes. Of course, anything can change. Things can move in either direction in a hurry, although this is going to take a while to confirm that we're in a longer term trend. The consumer staples, as you can see, a really, really nice run in staples. The index, the MACD, kind of rolled over, gave a bearish signal in here, saw the market suffer kind of sideways more than anything else. And here it is really giving way to a bearish look, and staples have not been a good place to be of late. And utilities, same thing. The very interest rate sensitive utilities, we have a zero target to utilities, and you can see utilities rolling over here as well. So folks, so far from a sector look, what you've seen is something I've shown you now for several weeks, several months in fact, is that the setup seems to be getting better and better for the cyclically oriented sectors, and less so and for the more defensively oriented sectors, which gives us some information as to what the market thinks about the foreseeable future for the economy, which is a pretty good sign, essentially, is what the market is communicating to us. And before I move on, let me reiterate that nothing in the market is assured or guaranteed. What we're talking about here is probabilities, and what largely dictates where we go here at Private Wealth Advisors from a sector allocation standpoint. Okay, so looking at the rest of the world, the Europe, Australian, Far East Index, as I've been talking now for quite some time, we've had a notably long period of underperformance of non-US versus US. So we're sitting here at a time where valuations look pretty compelling to me. And the economic setup as well, and as I've been expressing now for weeks, looks pretty compelling as well. And here we have the MACD just now. If you look closely, the white line has moved above the signal line, and you can see it on the histograms giving that signal. So we'll see how that looks going forward. I do want every client's portfolio to have some exposure there. And then emerging markets did turn up nicely on a trend basis back here in 2016. Had some issues after the election, but right now emerging markets look very good so far to start the year in 2017. And this is giving a nice, good-looking signal going forward. So folks, thank you once again, and as always, for watching and listening. I'm trying to keep these quicker than I used to, so I'm going to sign off here. And by the end of the week, you'll have my weekly message and maybe a quote or two in between. Have a great evening. Thanks again. Bye-bye.